News when you want it with Bloomberg News Now. I'm Amy Morris. There's your closing bell for this Tuesday on Wall Street, where stocks and bonds wavered while traders held off on any big bets ahead of tomorrow's Fed decision. More on that just ahead. But first, we're going to bring you the closing numbers. We do it for you each day here at Bloomberg. The S&P 500 lost 6 points. NASDAQ gained 31 points. The Dow lost 178 points. The 10-year Treasury yield at 4.18%. The 2-year yield at 3.61%. Spacex is moving ahead with plans for an initial public offering that would seek to raise significantly more than $30 billion. Sources tell Bloomberg the transaction would make SpaceX the biggest listing of all time. The company, led by Elon Musk, is targeting a valuation of about $1.5 trillion for the entire company. Sources say they are pursuing a listing as soon as mid to late 2026, but depending on market conditions, that timing could slip into 2027. A representative for SpaceX did not immediately respond to a request for comment. J.P. Morgan Chase shares have slid after the bank warned of higher than expected costs. Bank officials anticipate spending $105 billion next year, surpassing estimates. That sent shares falling. J.P. Morgan said consumers and small businesses look healthy, but that the environment is, quote, a little bit more fragile with, quote, less capacity to weather an incremental stress. Shares of J.P. Morgan slid the most in about 8 months, down more than 4.5% in regular trading. Okay, we'll get back to the markets and a preview of tomorrow's Fed meeting. But first, the Food and Drug Administration is investigating whether COVID-19 vaccines caused deaths in adults as part of a safety review broader than previously known. It at first appeared to be focused just on children. A spokesman for the FDA released a statement to Bloomberg saying the agency is conducting a thorough investigation across multiple age groups. Numerous independent studies have shown COVID vaccines to be safe. The FDA has also delayed a review of safety data for the abortion drug mifepristone at Commissioner Marty McCary's request to put it off until after the midterm elections. Behind the scenes, McCary has told agency officials to slow walk that safety review. And back to the markets now. They're focused on the Fed decision and its guidance for 2026. Investors are watching for signals on whether the Fed will continue to cut rates next year. Bloomberg's Michael McKee tells us a so-called hawkish cut may be possible. That's where the Fed lowers rates this month, but then signals it'll be the last cut for a while.
Well, the bet on Wall Street is that the Fed chair, Jay Powell, is going to try to suggest that this was the last insurance cut that they're going to take out for a while, that they will probably pause in January to see where the economy is. Of course, they don't have a great idea yet because we're still missing a lot of data.
Bloomberg's Mike McKee. White House National Economic Council Director Kevin Hassett says he sees plenty of room to substantially lower the Fed rate.
The deficit is surprised positively by about $600 billion. Half of it is tariff revenue, and then the other half is supply side positive effects from tax cuts.
Hassett is the front runner in President Trump's search for the next Fed chair. He told the Wall Street Journal CEO Council Summit that he would push for the substantially lower rates the president wants if he gets the job, but only if the data suggest it. President Trump says he would judge a new Federal Reserve chair by whether they immediately move to cut interest rates.
Is it a litmus test that the new chair lower interest rates immediately?
Yes. Well, this guy should too, but I think he's a combination of not a smart person and doesn't like Trump.
Trump's comments during an interview with Politico were a key signal to potential new Fed chairs on what the president would expect from them. The Supreme Court is considering a Republican-led drive to overturn a quarter-century-old decision and erase limits on how much political parties can spend in coordination with candidates for Congress and president. The Republican Senate Campaign Committee argues the limits on its fundraising has simply promoted the rise of super PACs that get unlimited contributions. Their lawyer is Noel Francisco.
What you've seen is an explosion in the size of super PACs, whereas the spending of the political parties has been relatively minimal. We think you start to restore the political parties to the relative political power that they've ultimately had, I think is lead to the benefit of democracy itself.
The court is scheduled to rule by July, early enough to affect the 2026 election. That's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.